If you'll remember from the very first video that we had in Chapter 3, we had this timeline of the accounting cycle. We had external transactions, trial balance, then we have adjusting entries and adjusted trial balance. Well, we went through all the adjusting entries with videos 2 and 3. Here is the adjusted trial balance for Eagle Golf Academy. Cash, accounts receivable, interest receivable. See, there's a lot more accounts because we put in a lot of new, or not a lot of new, we put in a couple new incomes. We put in a lot of liabilities related to our expenses. Right? One more revenue and several expenses. In the past, all we had was salaries, expense, what we paid. Now, here's all these adjusting entries. Closing entries are the next step in the process of creating financial statements. Here, we're going to systematically close all revenues and expenses to zero. Now, as we mentioned in class, the permanent accounts may go to zero, but that's just part of business operations. The revenues, expenses, and dividends will be forced to zero in order to get those amounts into retained earnings. Okay, so let's stop and think about our revenues in the beginning. Revenues have a normal credit balance, so how do you get rid of them? You're going to debit them, right? So we're going to debit the revenues, and then we're going to credit retained earnings. So here we have the service revenue totaled $12,600. If you will recall, we had some revenues and I added to them, right? So service revenue gets debited $12,600. It's going to go to zero. Interest revenue is going to be debited $75, and it's going to go to zero. Right? Here's our closing entry. Here's our adjusted trial balance, what it was at the adjusted trial balance. And then we go to retained earnings. Retained earnings was zero because we just began operations. And we're going to stick all our revenue in there. So after we close our revenues, we have a balance of $12,675 in our retained earnings. Closing expenses are real similar. It's just, hey, now instead of crediting retained earnings, we're going to debit retained earnings. And remember, like I said, we may only have one or two revenues. We're going to have a bunch of expenses. So we have to get rid of salaries expense, interest, utilities, depreciation, supplies, rent expense, all those guys. So they total up to $9,150. Now we put that closing entry, closing our expenses into retained earnings, and that gives us $35.25. And that should be our net income when we run our income statement in the next video. Closing dividends is just like closing expenses, right? Dividends have that debit balance, so we're going to credit them. We're going to debit retained earnings. So we get rid of all of our dividends, nothing's left. We had 200 in there, we close it, there's zero left. We put that over here in our retained earnings, so that drops our ending retained earning balance to $3,325.